morning, ladies and gentlemen, and you're very welcome to this week's edition of Farm Business Options. My name is Barry Caslin, Teagasc Energy and Rural Development Specialist, and today we're discussing the whole area of farm collaboration and with Farm Business Structures Specialist Gordon Peppard. Good morning, Gordon, and you're very welcome to this week's edition.
Good morning, Barry. Thanks for having me.
Great to have you here. It's raining very heavy here in Roscommon. What's it like in Kilkenny?
Yeah, no, it's not raining, Barry. It's a bit overcast, all right, but we've had a few lovely days, but it's a little bit more dull and overcast today.
Yeah. Well, Gordon, you were going to talk to us here about farm collaboration, and just to give you an introduction, Gordon is the Teagasc Farm Business Structures Specialist. He assists farmers and advisors in setting up of collaborative farming arrangements, such as farm partnerships, share farming arrangements, and contract rearing of dairy heifers. Prior to this role, Gordon was the first program manager for the Teagasc Green Acres calf to beef program, where he worked very intensely with 10 monitor farms for 3 years to improve grassland management, animal husbandry, and overall farm profitability. So, Gordon, you're going to be talking, it's a very wide area really, and it's really expanded in the last number of years, hasn't it?
Yeah, it is a very broad area, Barry, and there's been a lot of interest there in the last number of years, and there's numerous opportunities there now at the moment, and people are really starting to look at this as an alternative option, as an entry into farming.
Yeah, and of course there's lots of benefits in it as well. There's lots of risks associated with it as well, but they'll be the kind of areas we'll be talking about over the next hour. So Gordon, you have a short presentation, I think about 20 minutes, and you're going to go through that, and then anybody who has questions and any points that you raise in your presentation, they can put them in the chat function at the bottom there, and we'll put those questions to you afterwards then, Gordon. So I'm going to turn off my camera now at this stage and just hand over the presentation to you, Gordon. Okay?
Thanks, Barry. You might just let me know, Barry, are we sharing correctly there?
Yeah, I can see it. That's perfect there now. Okay,
perfect.
Gordon.
Okay. Thanks,
soon.
Barry. Good morning, ladies and gentlemen. As Barry says, my name is Gordon Peppard, and this morning I'm going to run through some of the collaborative farming arrangements that are happening on Irish farms. So just maybe as a brief introduction, what's the presentation going to entail? Well, I give a very short introduction. We'll look at what is collaborative farming. We'll look at what are the main collaborative options, and I'll just run through a few very simple family, non-family scenarios. And these are quite typical scenarios of the questions I would be asked on a day-to-day basis. So look, I suppose very, very briefly, to be aware that there are a huge number of collaborative farm arrangements out there, like they're ranging from registered farm partnerships, there's long-term land leasing, share farming, machinery sharing, contract cropping, purchasing groups, cow leasing, and there's multiple arrangements out there. And I suppose these can be family and they can be non-family arrangements as well. So we'll run through a few of the scenarios in those situations. And I suppose it's very important here, if you're considering going into any of these arrangements, that you sit down and you look, what is the best arrangement to suit your farm or your circumstance? And look, I suppose we're going to put up a health warning here at the very outset. Collaborative farming arrangements, they are substantial or major business decisions that you're making for your farm. So it's essential that you seek, number one, independent legal advice from a solicitor, 2, financial or taxation advice from an accountant, and the third thing there is agricultural advice from an advisor and a consultant. And these should always be sought before entering into any collaborative farming arrangement. I think it's just good governance no matter what business you're establishing. So look, people often say to me, that's a big word, collaborative farming. What are you talking about when you're talking about collaborative farming? So I suppose the first thing is it's 2 or more farmers that come together for mutual benefit. So that's what collaborative farming is. It can be any number of farmers, but to come together, to work together, but the arrangement must be for mutual benefit. It must be a win-win situation. So what do they bring? Different people bring different things to the arrangement, but generally it's the pooling of skills, and that could be knowledge, it could be experience, it's the pooling of resources, things like land, facilities, machinery, stock, cash, etc. And I suppose really the key to making all this work in collaborative farming is that it all requires cooperation. People must be willing to work together. Things will go wrong. There's no 100% smooth ride. So you have to acknowledge that things will go wrong. It's how you deal with those changes or problems and how you compromise as to how successful your collaborative arrangement will be. And obviously, I suppose throughout all this, you need to build up a good level of trust in your partner or the other people in the arrangement, and that everyone can compromise and get on with the business together. So look, I'm just briefly going to go through some of the main collaborative arrangements that I come across. The first one is a family arrangement, and I'm going to outline it in a scenario. And this is a typical scenario that I would be asked on a regular basis. So you look at this family farm situation here. You have John. He's a 52-year-old farmer farming his dairy farm at home, 150 acres. His wife, Mary, is working full-time off farm, very typical. They have 3 children. Tom, their eldest son, is 25. He's a young trained farmer who got his qualifications in Kildalton. He went out to New Zealand for a couple of years work experience, and now he's back in Ireland. Mary, their eldest daughter, is 22. She's a third-year student in UCD College. And their youngest girl then, Anne. Anne is 18 and hopefully able to complete the Leaving Cert now in June. And Anne has hopes to go to college next year. So it's a very typical family farm situation. Tom is very interested in dairy farming and he's been identified as the successor. Now, what are the issues that strike here? I suppose the first one is that John, 52, he's a very young man. Hopefully he has a long road still ahead of him. He probably has some financial commitments. He's 2 daughters as well that he needs to put through college. So John is not yet ready to step back. Tom, his son, has been identified as the successor, and Tom wants to come back home and be involved in the farm. So John's concern here is that if he doesn't do something, that by the time he wants Tom to set up and establish on his own, if he doesn't involve him now and give him some bit of ownership or responsibility, he mightn't be there when he come to an interim arrangement to involve all parties in the farm business. So I've just put it in a sort of a schematic diagram here. And if we look up in the top left corner, we have John, the current farmer. And on the right-hand side, we've Tom. Now, Tom could be a son, it could be a daughter, it could be a favourite niece or nephew. But it's a family arrangement and they're going to come together into a registered farm partnership. And a registered farm partnership is a registered business structure with the Department of Agriculture. And we'll speak a bit more about that in another slide. Over time then, the land can be either gifted when John is living, or unfortunately when he passes away on a will, it can be inherited and Tom becomes the successor. There is another step that can be put into the equation here, and they can upgrade it to a succession farm partnership. And again, there's a definite route there for succession, and we'll talk about that as well. So I suppose, why would anyone join a registered farm partnership? So I suppose the main thing here is that everybody is recognised in the business, and the son is not following daddy around the yard wondering, will he ever get a bit of the land? Will he ever get a decent week's wages? He's now recognised fully in the business. He's involved in all the business making decisions, whether that be physical or financial decisions. And I suppose it creates a clear pathway or a stepping stone for the transfer of the farm from one generation to the next. One of the great advantages of registered farm partnerships is that where a young person comes in, there's a huge amount of knowledge. They have been well educated in agricultural college, and they bring a lot of new ideas, enthusiasm and skills back to the farm. And there's an increased level of technologies out there now that can be used, and these all will help to increase efficiency. There's probably an opportunity to increase scale, and hopefully that will lead to a more environmentally friendly and profitable farming system. On a lot of the farms nowadays, stock numbers have increased, land areas have increased, output, land, labour in particular has become quite an issue to source good labour, reliable and labour that's there when you need it. So I suppose by bringing a young person into the business, you're sharing the workload in effect. A lot of people are busy on farms now, struggling maybe to get time off, whether it be for a funeral or a wedding or even to take a week's holidays. So by having a second person on the farm that's familiar with the running of that farm, it can hopefully enhance the work-life balance of everyone involved. There's also then the flexibility to work off farm in certain situations. Maybe the farm is not full-time for two people, so there might be flexibility for one or other to work some time off farm. And as we said previously there's an opportunity for people to take time off, maybe to pursue hobbies or interests outside of the farm. We would hope that the Registered Farm Partnership would have very much of a positive impact on health and safety. Now, instead of one person maybe herding or dosing cattle, etc., that you always have two or more people on the farm, and these jobs can be done a lot more efficiently and safely. I put these two at the bottom, maybe they should be at the top. These are the financial benefits of going into a Registered Farm Partnership. So I've split them into two, into taxation incentives, where there is an opportunity, depending on the profit share, to maximize the amount of income that comes into the farm at the low rate of income tax. There's other benefits there in terms of stock relief as well. And there's also a grant available for establishing the Registered Farm Partnership. If we look at the scheme benefits, then one of the main drivers is the TAMS grants. And as an individual, you're permitted to get an investment ceiling of up to 80,000. But in a Registered Farm Partnership, that can be doubled to 160,000. Also, there could be the opportunity under the National Reserve, if you have naked land with no entitlements, to maybe get some entitlements from the National Reserve, or if you have low value entitlements, they may be topped up. The final one I'm going to mention is the Young Farmer Scheme, and the Young Farmer Scheme is a top up of approximately 67 or 8 euros on up to 50 entitlements if you have a young trained farmer in your ranks. So look, there's some of the key benefits of a Registered Farm Partnership. If we very briefly just mention the Succession Farm Partnership, the reason it was brought out in 2017 was that there's a high percentage of farmers in Ireland that are over 80 years of age, and there's a lot lesser of a number are under 35. So it was an incentive to transfer the farm to the next generation. The key requirements of it is that you have to be in a Registered Farm Partnership, and then you upgrade it to a Succession Partnership. And that Succession Partnership identifies that between the end of year 3 and the end of year 10, that the farmer will transfer a minimum of 80% of the farm assets. Now, the real carrot for doing the Succession Farm Partnership is that there's a €5,000 tax credit to the partnership for 5 years. But just a word of caution, if you're in the 31, 32 years bracket, there could be a conflict between the young trained farmer stamp duty relief and claiming this tax credit. As you can't transfer the land for 3 years, you could be pushed over the 35-year threshold for the young trained farmer stamp duty relief. So just maybe have that discussion with your accountant if you're thinking of going down this route. Obviously, if you don't carry out the transfer as specified in the agreement, the tax credit that you claimed may be recouped by revenue. So it's just obviously if you don't carry out what you're supposed to do, there could be consequences. Just switching over to the other side then, non-family arrangements. So again, these were two farmers I dealt with in a previous life. They were neighbours, one in Suckling and one in Darien. And they very effectively joined into a land leasing arrangement which worked well for both parties. But to give an example of a typical scenario that I come across in my daily work, you have Pat, 72, he's dry stock farming in Wexford. His wife, Breed, is a retired primary school teacher. They have 2 kids who are well reared at this stage and have fled the nest. Their daughter Sarah is working in the UK as an engineer, and their son Michael, 35, has established his roots in Mayo. His family are settled there and he's working, and he's no interest in farming. Sarah has been identified as the successor, and she plans to return to Wexford, but due to work commitments, she's not able to do it for 5 years. So they have a neighbour, Andy. He's 29. He's very interested in farming, but he's no farm of his own. But he has worked for a long number of years part-time with Pat, and they're well familiar with him. They know his farm, and he's a good young fella that they'd like to get involved with. So I suppose, what are the issues here? I suppose Pat is at an age now where he's worked all his life, the kids are reared, he'd like to step back and maybe enjoy a bit of time off. He has a successor, Sarah, but she's not ready to take over. There could be a scenario here where there's no identified successor as well. It's the same thing. So look, again, like the first situation, there's interim arrangements can be entered into here. So we have Pat up here, who's the current farmer, and we have Andy. He's not a potential successor, but he is a person that maybe could come in and help out. So there's 3 options here. They could, again, join a registered farm partnership. They could go into a share farming arrangement, or they could enter into a long-term land leasing arrangement. And look, I suppose here, these are going to be scenarios where there's going to be a time frame put on them. And then at the end of that time frame, you have to decide what's going to happen. So what's going to happen at the end of the 5 or 10 year period? They could continue with the arrangement with Andy, or if Andy wanted out, they could source a new third party. If the successor is ready, they can transfer it over to him or her. In this case, it's Sarah. And if it was a situation where there's no successor, well, then they have to decide, do they will it to someone else, or did they just go and sell the farm? So look, we've covered the registered farm partnerships already. We've boxed that one off. I'm going to mention a short bit about share farming and long-term land leasing. So share farming is basically, the concept here is where you have one farm and you have a landowner. The landowner obviously owns the land and the facilities. And you have the share farmer then who comes in to work that land with the landowner. This share farmer is very typically, it's often a second son on a farm. It could be someone that has no access to land but really wants to farm. So they come in and they work together on the share farming arrangement. It is important to note that they're 2 separate businesses, and both people have to sit down and do their own budgets to ensure that the deal is worthwhile for them. There's no sharing of bank accounts or profits. Everyone comes in supplying X amount of inputs and they take out X amount of outputs. So it's a sharing of outputs rather than profit. So what's involved? I suppose the first thing is, if you're going into this type of arrangement, you really need to have it well planned. You need to sit down, you need to discuss with the person you're thinking of going into partnership with. You need to ensure that you can work with this person, that you can get on and have some sort of an agreement. That's the first phase. The second phase then, I suppose, is the operations phase. And that's where the farm is actually working and you're working together. Identify who's doing what, who's responsible for what areas, and how the whole thing will work once the arrangement is set up. And I suppose the third thing, it might sound funny to be mentioning at the beginning, but it's very important to have an exit strategy. That when you go into the business, if there's a lot of investment on the farm over the time you're in there, you need to know how you can get some of that value back out. So there should be a very definite exit plan from the outset. If we look at long-term land leasing, then I suppose we're looking at it from 2 sides of the fence. We're looking at it from the benefits of the lessee. So from the person taking on the land, then, rather than a con-acre system where they never know when they're going to be asked to leave the land, they now have security of tenure. And that means that they can have a longer term business plan and they can plan for the future and what might happen down the line. They may have an opportunity to increase scale, particularly if it's adjoining them. And more often than not, some buildings will come with the land, and this will reduce the need for capital investment. With the price of land now and the opportunities to buy it being rare, it can often be a much more cost-effective structure than land purchase. If we look at the lessor, then that's the person leasing out the land. Well, this provides an opportunity for this person to step back or retire. while also retaining ownership of the land, which can be important if they have a young person coming on that may want the land down the line. There's very attractive tax-free income incentives there for long-term land leasing. And subject to meeting the requirements, it can still retain qualification for the retirement relief from capital gains tax. There is an opportunity then that once the leasee has the land for a number of years, that they're more than likely going to maintain it in a good condition, that they will increase soil fertility, they may even fence it, they might reseed it, lime it, etc. So look, the land will be maintained. It'll probably be even maybe improved over the lifetime of the lease. And just maybe to briefly mention the tax-free incentives, I said there's very attractive tax-free incentives there. So it has to be for a minimum of a 5-year lease. That lease will attract a tax-free income per year of €18,000. And you can see there as you go up along, up to a 15-year lease, up to 40,000 tax-free per year. Those thresholds can be doubled if the land is in joint ownership. So if in a husband and wife situation, a 7-year lease could avail of 45,000 if it can be shown on the folios that the land is in joint ownership. And again, this income can include the value of the land and the BPS entitlement that's leased out with it. So just looking at one final scenario. So again, this maybe is a scenario where you have a farmer who has worked hard all his life. He's like us all, he's not getting any younger. He might wish to cut back, but not get out altogether. So there is an opportunity here to go into a collaborative arrangement. And this collaborative arrangement could be an alternative enterprise. It could be something like contract heifer rearing, or it could be contract calf or weanling arrangement. So Barry, we're tight on time. Just to very briefly say, contract heifer rearing, what is it? It's a written agreement between a dairy farmer and a heifer rearer, where the dairy farmer supplies the heifer to be reared, and in return, the rearer gets an agreed fee per head per day. The rearer undertakes to care for and return the heifer in calf, in good condition, and have proper weight for age. And I suppose, like any of these arrangements, both parties must benefit for a successful arrangement. So look, look, I suppose very briefly, there's 3 key components here. There's the dairy farmer, there's the heifer to be reared, and there's the contract rearer. What are the benefits? The dairy farmer simplifies the system. He now only has one group of animals to worry about. In effect, it's bringing in additional land, labour and facilities, which can be hard to source and difficult to get the right person or maybe the right land. And hopefully this will improve the work-life balance for the dairy farmer. How can the contract rearer benefit? It reduces the rearer's exposure to volatile beef prices. It gives them a regular cash flow, and they don't need these stocking loans from the bank every year. There's less investment required in livestock. So in summary, Barry, collaborative farming, I describe them as a bit like a balance scales. Everything must be in equilibrium in terms of it must be a win-win situation. And if that scales is tilted one way or the other, this is not going to work. Collaborative arrangements, they are business arrangements. They should be taken seriously. They should be well planned. We've outlined a number of the different options, but there's even more options out there. So you need to assess what best suits your needs. You need to plan, seek advice, and prepare well. And I suppose the key to any successful collaborative arrangement is to have trust, flexibility, and be good at communicating all along throughout the arrangement. And one final comment is to keep future succession in mind when you're making your plans. What is going to happen with this land down the line, and to ensure to involve the solicitor and accountant that there'll be no taxation or legal surprises at the end of the day. So that's my presentation, Barry, and it's over to you for questions now.
That's great stuff, Gordon. Thanks a million for that. And for those of you who just joined us a bit later, if you want to put any of your questions to Gordon in the Q&A function there, we'll put them directly to him here now. Gordon, lots of questions coming in there, but how many of those farm partnership agreements have been signed up in the country? I remember reading a couple of years ago there was around 1,500 formalised farm partnership agreements. What's it at today?
Yeah, we've probably moved on a bit from that, Barry. Up to the end of 2020, there was just gone over 3,000 registered farm partnerships, and this spring the partnership office have received between 300 and 400 applications for this year as well. So look, by the end of this year we'd be hoping to be up somewhere in the region of about 3,500 registered farm partnerships. So there's quite a significant number of them there now at present.
And there's obviously a cost involved in formalising a registered farm partnership. Is there any support available towards that cost?
Yeah, so look, I suppose in establishing any registered farm partnership, it's very important to go through the correct procedures and the correct protocols. And to do that, I would suggest that you need to involve an accountant, a solicitor, and an agricultural advisor. And look, obviously for all of those, they're going to have their fees. So there will be fees involved. But there, as you said, there is collaborative support there, and there is a farm collaborative grant available, and it covers 50% of the fees to setting up a partnership, Barry. So it includes up to 5,000 of a spend. It doesn't include VAT, so there is up to 2,500 of a grant available if you spend up to €5,000.
Okay. You mentioned there about shearing machinery. I'm just thinking about certain types of machinery that, maybe a step like maybe shearing a combine or something like that is going to raise fears maybe about the timeliness and who gets the combine at the right time for their crop. Is there any kind of safeguards or any kind of examples you've seen where people can set up those, and where I suppose both farmers, would they maybe take it on every second year, who gets to use the combine first or something like that?
Yeah, no, it's a very serious question and a very serious concern, I suppose. What I would say about all these collaborative arrangements is that there is template agreements available for all of them. All those sort of issues are covered in them, Barry. But generally, the example you give there would be a definite plan made out where the cropping would be maybe planned, that they wouldn't all have the same types of crops, that the crops will be rotated each year, that there'll be some winter, some spring, there'll be late harvesting, early harvesting. And then I suppose that the real problem in that scenario arises where the weather is broken or is bad and everybody wants the combine on the one day. So generally within the agreement, there would be some sort of protocol that X amount of % of the farm will be cut for one farmer, then you move to another. But look, practicalities about distance between farms and all that comes into it as well. So it's about sitting down with your counterparts, trashing out the cropping rotation and the cropping plan, and to come up with an agreement in those situations.
Yeah, all of this, you're really asking people to dare to do things differently, aren't you? Or at least consider it. It's something that people don't like, maybe moving away from the status quo or what they're familiar with. It's a new way of doing business.
Yeah, sure. Look, it's a new. I suppose it's a serious one for some people to get their heads around. You need to be quite open-minded. I suppose in 90% of cases in registered farm partnerships, they're probably within a family grouping, Barry. So they're really maybe formalising the pathway to succession. They're bringing the young person into the business earlier. There is a number, obviously, of registered farm partnerships that are between non-relatives. They could be neighbours, they could be people in the same line of business. So there is both out there, and it is a matter of having an open mind and getting down with your agreement and being flexible.
Do a lot of the arrangements start small, Gordon, and maybe grow into something bigger, maybe which offers increasing benefits?
Yeah, well, sure. Look, I suppose the registered farm partnerships, take them as an example, it's really a great way of bringing a young person into the business, and maybe initially they might start out with as low as a 20% profit share in the business. But over time, as they take on more responsibility and they take on more onerous in terms of borrowings, and that whole thing can swing on its head. And over time, the plan can be amended and the profit share changes over time to bring the young person up to maybe the 80 or 100% as they move towards ownership of the land and the business.
I just wonder, do any farmers ever take the collaboration a step further, and maybe after a few years that they might see their gross margin pooled to maybe further share the risk, or but still remain independent of each other in terms of their businesses?
Yeah, I suppose, look, in a lot of these collaborative arrangements, particularly something like the share farming, it's a sort of an all in, all out. If you're farming in a registered farm partnership, all your farming business is supposed to be done in that structure. So um, I suppose once you go into the registered farm partnership, you have all your land, all your stock, all your facilities, etc. in that structure then.
Okay. And how does collaborations work in practice? Are monthly meetings a good practice? I'm just wondering, from you're coming together with somebody, it could be a relation or a non-relation, but you're working with them, and in most businesses, that have meetings maybe weekly or monthly or something like that. How does it work in practice?
Yeah, sure. In the registered farm partnership agreement, there is a section in there where it's recommended that you have a regular meeting. Now that could be monthly, it could be bi-monthly, it could be whatever is agreed between the partners. But look, I suppose in practice, in a family situation, that conversation probably happens around the tea table, or it probably happens around the dinner table. But definitely, I think, Barry, you're correct in that it's something that should happen. And whether it happens in a formal situation or around the dinner table, it's something that definitely should take place. Just to monitor where you are, what's to be done, and what's the progress, and how are we going here.
You mentioned there's over 3,000 partnerships there at the moment. Are there any examples of where they break down after a period of time? And I know you said they're generally over a 10-year period, and farm partnership, maybe after 3 years, the farm can be transferred formally at that stage, maybe, or 80% of it can be transferred during that period between years 4 and 10. But do you ever see examples where there's a breakdown in relationship between the partners?
Yes, absolutely. Look, I suppose every partnership is entered into in good faith, and they're generally for an initial 5-year period. And after that period, then they can be extended or rolled on. But look, in some cases, they come to a natural end that maybe after the 5 or 10-year period or whatever was agreed, it's a natural end. Unfortunately, in a small number of cases, there is either disputes or there's disagreements on something, and they come to an end as well. But look, by and large, I think the more work is done initially to establishing the right structure, to making sure you're going into partnership with the right person, and the more planning and preparation, and the better the agreements, that the stronger they will be, and the more chance they have of passing the test of time.
You mentioned there, Gordon, there's a €5,000 tax credit per year available for the partnership. So, like, if there was a breakdown, could you be facing a tax bill at the end of maybe an 8 or a 9-year period if it broke down after that length of period of time?
Yeah, I suppose just to be clear on the 5,000 tax credit, that's only available for the succession farm partnership. So the succession one is where there's a commitment made to transfer a minimum of 80% of the farm assets between the end of year 3 and the end of year 10. So, for example, if you've availed of your tax credit for 3, 4, or 5 years, and then the partnership breaks down and the land is never transferred to the intended recipient, well, then obviously, I suppose, you haven't carried out your side of the deal. So there could be potential clawbacks there in that scenario. But look, the general registered farm partnership, that tax credit doesn't apply. You just have the other benefits of the maximising the income tax at the low rate. You have the stock relief, and you have then the scheme benefits that we spoke about as well.
Gordon, how important is it to talk to others who are already operating in the way you might consider? I know you've given good examples there of people. Is it important to talk to other people, or is it possible to talk to other people who've already gone down this route?
Yeah, I think that's a really good suggestion, Barry. I think anyone going into these arrangements should talk to farmers that are already in it. They will give, I suppose, the real pros and cons of what's good and what's bad about them. They'll give you what to look out for. So I suppose talk to other farmers that are in it. Sit down and talk with your own family members if that's who you're going into the arrangement with. decide how this is going to work in practice once it's set up, who's going to be responsible for what, who's going to get what. Also, you need to talk to your accountant. There's tax implications here. There's a lot of different structures to be set up. You need to involve your solicitor from a legal point of view. You probably need to talk to your local regional veterinary office as well in terms of herd numbers and schemes, your agricultural advisor in terms of how the entitlements, the GLAS, the TAMs, all that will work. And I suppose just then in terms of the partnership office as well, maybe to include them in your discussions to ensure that you have eligibility. One of the big things I often see, Barry, is people come and they say they want to join a registered farm partnership and they actually don't meet the eligibility requirement. So that's important as well to satisfy that requirement.
Yeah. A couple of questions here that relate to share farming, share milking. One question, how does share milking work?
Yeah, so basically that's the situation where you maybe have a landowner and he has a milking herd. He maybe has no successor, or maybe he has a successor but they're not yet ready. He's at an age maybe where the workload's getting heavy. He wants to step back. So he's willing to bring in a share farmer or share milker. That person comes in and they supply, they have an agreement. The farmer supplies obviously the land and the facilities and maybe some of the cows. The share milker comes in then, he's probably supplying more cows, he's supplying labour, he's supplying management, and he's supplying all that skill, maybe some cash as well. And then they have to agree on what percentage of the inputs and outputs are paid by each party. So for example, often the build-up fertilizer might be paid for by the landowner if P's and K's need to be built up, but the regular maintenance and the nitrogen and that will be shared between the share milker and the landowner. And then they have to work out some sort of a ratio of what percentage of the milk check does each person get for their inputs. So look, I said it there in the presentation, I think it's very important that those two people sit down and do their own budget, and they have to know what costs they're going to incur and what outputs they're going to get back out and ensure that's viable for themselves, Barry.
And can you just distinguish there between share farming and a partnership arrangement? Because they are kind of both like partnerships, but of a different sort.
Yes, yeah, and it is important to distinguish them. I suppose a partnership is a business arrangement where the two people are working as the one business or one unit. There's a shared bank account. So all the monies that come into the farm and all the monies that go out of the farm go through that one partnership account. The share farming then is slightly different in that you're sharing outputs rather than profits. So there's no sharing of bank accounts. Everybody has to do a budget on how much they can spend and how much they get out. So there's an agreement done up on what percentage of each input is paid by the landowner and the share farmer. And again, there's a ratio on what profit or what split of the outputs, whether that be cow sales, calf sales, milk sales, what percentage of each of that is retained by each party. So okay. There's no sharing of bank accounts in that scenario. Everyone does their own budget.
And if two of the parties, as part of a share farming agreement, if they weren't happy and said, God, this isn't working out, can that be reviewed on a yearly basis, or how often can they generally be reviewed? And do you need a solicitor to draw up these agreements for you?
Yeah, well, again, Barry, there is a full set of template agreements there for all these arrangements. I would say that these are template arrangements, and they won't cover every individual scenario 100%. So the two parties involved need to sit down with the template. They need to go through it word for word, and they need to doctor it to suit their own individual situation. I would be very strong that it probably needs someone like a solicitor to look over it to make sure that all the I's are dotted and T's crossed. Because there's such a commitment made by both people in the likes of a share farming arrangement in terms of bringing cows in and establishing a business, there's generally a minimum notice period put into those arrangements. And it could be 6 months, it could be a year, but there would generally be a notice period put in there that you can't just pull your cows out of there in the morning, that there is a sort of a planned exit strategy.
I just see another question in there that relates to the land leasing and share farming. That are there tax incentives for share farming similar to long-term land leasing?
Yeah, so like we have very substantial tax-free incentives there where a land lease is for a minimum of 5 years. In the share farming, you're sharing in the risks and the rewards really. So it's basically on a farm trading profits that you're taxed there. So there's no income tax reliefs from that regard. I suppose there is, if you qualify, there could be stock reliefs and that sort of thing, but not in the same way as the land leasing.
Yeah, so I suppose share farming is a good example. Would be where one farmer would have the machinery, another farmer wouldn't have the machinery, and you're sharing that machinery between the two farms, or the labour you're sharing as well to a certain degree. Or one farmer isn't able to do the same amount of labour or milk the cows, the other farmer could milk the cows on their behalf. Would you amalgamate herds in those kind of situations as well in a share farming agreement, or would they have to be kept separate?
Yeah, well, very often, I suppose, you have an existing farmer there, as you say, maybe he's finding it difficult or more of a struggle to milk the cows or calve them, whatever, and he just wants to bring in a bit of renewed new enthusiasm and labour and skills and that. So, like, if that young person coming to the table is bringing cows or heifers, they can come into the herd, but they will all be farmed through the one herd number. And I suppose that's from a TB management point of view and a disease risk and all that. So on the share farming arrangement, the number of cows and their value that you bring will be acknowledged, and that will always be there for when you pull out, you'll know what share you have there. But they will all be farmed through the one herd number for disease purposes.
Question there, any details on two siblings starting a farm partnership?
Yeah, so two siblings, so we'll say two brothers just for talk's sake. There's absolutely no problem in that happening. The big thing there is to ensure that it's an eligible partnership. So just maybe to go through the eligibility on that one. In order to be eligible to form a registered farm partnership, one person must have farmed a minimum of 3 hectares of owned or leased land in their own right for at least the previous 2 years. So that's the basic requirement. The second person then has to be either the same thing again, or they have to be a trained farmer with a minimum of a level 6 agricultural qualification, and they must have a minimum of a 20% profit share in the partnership. So look, it's very important to establish that you have the eligibility for a partnership. I often have people coming to me saying, oh, the herd, well, it's not the pub anymore with COVID, Barry, but they heard on the grapevine that they could form a partnership and get a lot more incentives. But when push came to shove, the second person didn't have farmed in their own right, or they didn't have the agricultural qualification. So it's important to establish that.
It's coming very much to the fore in your talk there, Gordon, the importance of having clear goals for costs. Can you just maybe stress the importance of having clear goals for costs, income potential, and the personal aspects of any collaborative arrangement?
Yeah, so look, I suppose when you're going into a collaborative arrangement, automatically you're bringing at least a second person into the business and maybe a third person. So I suppose, like, if one person has been living on that farm and living off that income, now they're going to have to share, and it's going to be diluted unless scale is increased or efficiencies or both are improved. So I suppose it's very important that there is a plan there, that this farm can be viable to support two or three people in the arrangement. So that's why I suppose a budget's very important, Barry, that you know what costs are going out and what potential monies are going to come back there, and is it sustainable, I suppose, environmentally and profitably as well at the same time.
Very good, Gordon. A question here. I'm a dairy farmer, want to expand the herd, but had needed the land and the labour. I have a good neighbour who is a suckler producer. So this is a dairy farmer. He's a neighbour who's a suckler farmer who plans reducing his herd size and has spare housing and grassland available. I would like to approach him to take on my dairy heifers at 4 to 5 months of age and rear them and return them to me in calf. Are there any very simple agreements available that benefits both of us?
Yeah, no, look, that's a very typical contract heifer rearing agreement, and it can work very well in the scenario you outlined there. So on our website, we have a contract rearing template. Now, look, when you download it, it looks like it's 24 or 5 pages long, but in reality, there's only about 4 to 5 pages that need to be completed, and they're very simple to complete. Like the first page is name and address and herd number. The second page is the tag numbers of the heifers. And then there's 1 or 2 pages that just identify the fee, the agreed fee per head per day, the agreed management protocols in terms of maybe vaccinations, in terms of maybe weight targets, and the very important one maybe to agree on that situation is the breeding protocol. Number one, what is the breeding protocol? Are you using AI? Are you using stock bulls? Who's picking the AI? Who's ringing the AI man? Who's doing the heat detection? All that needs to be clearly outlined so that no one is into any doubt as what their responsibility is. But look, no, there's a very definite contract heifer rearing agreement on our website, and just follow it down. There's about 4 to 5 pages to fill out.
Gordon, while you mentioned those templates there available, are they on the Teagasc website as well, those templates?
They are indeed, Barry, yes. So they're under the farm business section of the Teagasc website, and you'll see partnerships, contract heifer rearing, etc. there. If you follow.
I suppose it's still very important, even though there are templates there, to maybe get your tax advisor to look over them or get your solicitor to look over those agreements as well.
Yeah, as I said, they're only template agreements. That they're there to give a bit of a basis to the discussion. You then have to put the meat on the bone in terms of what you want in that arrangement. So you sit down with your counterpart, you go through it, and then maybe you get a third party, an accountant or solicitor to look over it and finalize it. Very important to involve them in the overall discussions.
Question there, have you seen any examples of farmers who have successfully set up to share all machinery and tillage operations?
Yeah, so look, again, that's back to the machinery sharing, and there is an element of that going on, and again, we have templates available for that. So look, that is happening on the ground. With the cost of machines now, it makes sense. The big thing is, I suppose, that you're working with people within a certain radius of you, that machinery can be easily accessible. Again, agreement drawn up on the crop rotation, that not everyone wants the sower or the harrow or the plough the one day, and that can all be agreed on a rotational basis.
Yeah, you probably see enough as a successful collaboration, Gordon, where you have different types of farmers maybe coming together with different types of expertise. Maybe say one of them is keen on tillage crops and the other maybe would rather concentrate on livestock. I think that type of arrangement is going to, they can focus on their preferred areas then.
Yeah, well, I suppose it's like we all have strengths in different areas, Barry, and I suppose hooking up with someone that brings expertise in a different area, I suppose, is going to enhance the farm, and it's going to bring new skills and new technologies to the table, and that, I suppose, increases the efficiency and the profitability, hopefully, at the same time as well.
Okay. Question here, how are profits shared in share farming?
Yeah, so I suppose that comes down to what everyone is bringing to the party. So, like, depending on what you're bringing to the table, and how much, like the 4 big ones are land, labor, facilities, and land, labor, facilities, and cows, I suppose. So, depending on what everyone is bringing, you have to sit down and work out sort of what ratio are you providing versus what the other person is providing. And then I suppose that forms the basis of the discussion then on what money you get out of the calf sales, the cow sales, the milk sales.
Okay. I'd say a question here, and I suppose it's it kind of relates to agri-tourism to a certain degree. We run a self-catering business in Galway. Another farmer 2 miles away runs another self-catering unit. We have cooperated on bookings in a very simple arrangement where we agree to recommend the other when the other is full. So I suppose it's another example of a diversification, and where they're collaborating on, I suppose, getting the most for each other.
Yeah, and look, sure, that's absolutely brilliant, Barry, that they're both looking out for each other. They're trying to enhance the business of each other, and sure, it makes sense if you're full and can't take someone to help your neighbour out and get a bit of business for them at the same time. So another good example of how people can work together.
It's a great example of the scope for cooperation on a small scale. I suppose there's lots of examples of small scale operations, maybe farmers growing niche crops, or maybe where they need to be working together, maybe to pool their resources for maybe distribution of whether it's eggs or maybe artisan food production. So there's probably those type of structures should be built upon and there's good examples of cooperation out there in those areas also. Other questions here. How do you go about setting up a partnership herd number?
Yeah, so I suppose the first thing you really need to do is you probably need to talk to your agricultural advisor, number one. Number two, then there can be two different types of partnerships. There can be a single herd partnership, or there can be a multi-herd partnership. So for example, a multi-herd partnership could be where, say, myself and you, Barry, are going into partnership. You've been farming on your own right with a herd number, and I've been farming in my own right with a herd number. So we bring them together, and it's a multi-herd partnership. A more typical situation is where you have a father who's farming away at home under his own herd number, and his son or daughter comes home from college and they want to join him. Now, generally, that son or daughter would join onto the father in a single herd partnership. So they would have to fill up an application form and submit it to the local regional veterinary office, and then that puts it as a father and son herd number then, and that's a single herd partnership in that scenario.
Okay, so it's the district veterinary office you're going to, and you're talking about the ER1 form that you're submitting there.
Correct, but I would definitely run it by an agricultural advisor or consultant, because there is other implications in terms of entitlements and maybe schemes, and like GLOS need to be informed in advance of any change to the structure before you do it. So I would talk to an advisor or consultant before you make any change.
You see another question come in there that relates to it as well. I plan to set up a partnership arrangement with my daughter. When is the best time to change my herd number? Or is there a best time?
Yeah, that's a very good question. Look, registered farm partnerships applications can go in at any time during the year. The partnership office do put a deadline at the end of February every year, and that deadline basically is to ensure that they will have the partnership set up for the BPS application in mid-May. Now, saying that, the applications can go in after that, but sometimes they won't get the partnership processed in time. So I would say if you can get in ideally before the end of February is the best time, or either else leave it until after about the 1st of June. Doing it anywhere in there runs the risk of herd numbers getting mixed up and entitlement payments being delayed. But look, again, I would discuss with your advisor, and a plan can be drawn up there. But either before the 1st of February, before the end of February, or after the 1st of June will be probably the best options.
Yeah, I suppose, and after the BPS period, and when there's no more commitment of the land and you're going into a new year.
That's correct.
Somebody allows viewer, what do I have to ask my accountant to do in setting up a partnership with my son?
Yeah, that's a great question. Yeah, so no, that's a great question. And look, I suppose the accountant has a number of roles there. I suppose the first one is he will register your partnership business with revenue to get a tax reference number. So that's the first thing. The second thing he will do, he will help you to establish a capital account. And a capital account basically outlines all the assets and liabilities that everyone is bringing to the table on day one. And it's very important to keep a record of that. God forbid, if the partnership breaks down, everyone needs to know what they have in there. The third thing he will do then, he will help you decide on a profit sharing ratio. And if a young fella is coming in as a young trained farmer, he has to have a minimum of a 20% profit share. But maybe he can have more, and maybe it might maximize the low rate of income tax. The other thing, when you're with the accountant as well, it will be very important to discuss the future implications of land transfer and taxation in terms of capital gains tax, stamp duty, and capital acquisitions tax. it would be very prudent to have that conversation when you're having this sort of discussion as well.
Mhm. Very good. Can you comment on the implications for capital investments on the dissolution of a partnership?
Yeah, so look, I suppose the capital investments, basically, I suppose if there's a big developments going on in the lifetime of a partnership, there probably should be some agreement of a tapering off, like should they be depreciated over a certain period of time, and if you're in year X, that a certain amount goes back to each partner. So obviously the buildings are going to be built on one farm or the other. So if the partnership breaks down, there's going to be someone left without, for example, the farm building. So they need to get some sort of value back. So there should be some sort of a step down structure after so many years it's depreciated at X rate.
Okay, and that would be part of the legal agreement that's drawn up initially as well.
Yeah, I think that's where that should be, Barry, and that's why it's important that these agreements are done up well, done up correctly, and that they're planned for.
A question here about the long-term leasing. If I long-term lease my land and the farmer who's leasing it from me, if they go bankrupt and are not able to fulfill the lease period, will I have to pay back taxes, the monies received and taxes over that period of time?
Yeah, that's a very common question that comes in. And look, if the lease is broken for what they call bona fide reasons, sort of genuine reasons where something happens, if the land lease was entered into in good faith, it was entered into for a minimum of a 5-year period, and bona fide reasons occurred, there's no clawback on the money, tax money, free money that you got going backwards. But obviously going forward, you don't get the tax-free money again unless you sign up to a new lease with another person, and that lease has to be for a minimum of a 5-year period again. So no problem going backwards, but unless you sign up for a new lease going forwards, the incentives will cease.
Okay, that's quite an important point. Is disease a risk in taking in animals from another herd owner? I suppose this relates to contract rearing at heifers, Gordon, but could you have a farmer contract rearing for a number of dairy farmers?
Yeah, in theory you can contract rear for a number of farmers. Now, obviously, the more farmers you're contract rearing for, the bigger the risk is, and a lot of the dairy farmers they're not really in favor of it. Ideally, it will be from a maximum of one other herd, but that's often not practical in terms of maybe they can't supply enough animals to stock your farm, depending on the size of your holding, etc. It is a concern. TB is a risk, and there is protocols there if either of the herds get locked up with TB. And the Department of Agriculture have a lovely brochure on bovinetb.ie there. If you want to look it up, it gives the recommendations of what to do in a TB breakdown. The one thing to note that if heifers break down with TB on the point of calving, where they need to go back because they're calving down and they need to be milked on health and safety grounds or welfare grounds, you do have to apply to the regional veterinary office on a case-by-case basis to move those animals by license. So just to be aware of that's on a case-by-case basis.
Okay. We've run out of time there now, Gordon. That was excellent, and you've answered loads of questions. And if anybody wants to find any more information about this, can you just briefly tell them where to find this information, maybe on the Teagasc website?
Yeah, so look, if you go into the Teagasc website there, collaborative farming, under the rural development section, you should find all the relevant topics. So there's the partnerships, the leasing, share farming. There's a heading there for it all. I would also suggest that if you're serious about getting into it or considering it, that you contact your local Teagasc advisor. We have offices all around the country, and we have advisors dealing with all these areas. And then if there's further follow-up required, the advisor can come back to me, and we can help them deal with your query.
Brilliant stuff, Gordon. Thanks a million for that. And that's all we have time for this week. Next week, on next week's edition, we'll be talking to Austria, live to Austria, to the Steiermark area. We'll be talking about farm diversification with an agri-advisor from the Steiermark region, and also 2 farmers who have diversified their land and providing holiday accommodation. So from me, Barry Caslin, thank you very much for watching, and we'll talk to you again next week. Bye-bye.
Thank you.